Good morning. Good morning. Good morning. I'm going to give people just a second to hop in. Come on in, people. Come on in. So I'm not going to walk like this, but I just wanted to do like a full screen so you guys can actually see me, but you probably can't hear me because I'm too far away. Good morning, everyone. Sorry, I'm just trying to, good morning, how are you? I'm just trying to like adjust my selfie stick. So every time my daughter gets a hold of my selfie stick, I've got to like rework it because it's just not right. Just ain't right. Okay. Good morning, guys. Thank you for hopping in. I'm going to shorten this just a little bit because it's easier to hold. And so I'm Rashida Clark. I'm outside of my office right now. So that's probably why you hear traffic, and I'm having to talk louder just to make sure that you can hear me. Hi, Luther. So this morning we're talking about, selfie stick is kind of weird. We're talking about job changes. What happens when you change your job, and how long do you need to wait to apply for a mortgage? So the short answer is, if you change jobs and you remain in the same career field, then you don't have to wait. So say you're a teacher at John Smith Elementary, and then you go to be a teacher at Christopher Newport High School. You don't have to change. You don't have to wait. Because you're still a teacher, you're still in the education field. Or say you're a teacher and then you go to a college and you're a professor, or you're a teacher and you do something else. You know, whatever you do, you stay in the education field. That's not a change. But if you change careers, hey, if you change career fields, so say like for instance, Newport News Shipbuilding is doing some layoffs. So I'm here in Newport News. They're doing some layoffs. So you know, those people they may change their career. So you may have a pipe fitter that goes to be a manager, you know, at the movie theater or something like that. That's a career field change. Now, what if you stay in the same field, but you have a gap in employment? Then you need to wait a little while. It will depend on the bank as to how long you have to wait, but I would say you need at least a month's worth of statements from that bank. From that new job before you apply. Probably more like 6 weeks worth, you know, give or take, depending on how often you get paid. But I hope that answers the question. I got that question after a Periscope session in an email, and I thought it was a really, really good question. So unless you guys have other questions, I just want to say happy holidays or Merry Christmas if that's what you celebrate. I think I've missed Hanukkah, but I appreciate you guys hopping on. You see I'm outside and my hair is straight. I'm not used to this, so the wind is blowing it all over the place. But I just wanted to hop on and give you guys a little something before the holidays to say hi. Now I'm actually using the selfie stick as I watch the little birdies. So do you guys have questions about that before I hop off, or other real estate questions before I hop off? I don't know that I'm going to be doing a ton of other Periscopes this week. Well, technically I have to because I'm a Peri girl. So there'll be short scopes, but I don't know that there's going to be a ton of content just because it's the holiday week and I need to take a little time off. So I'll give you guys a second to see if you have any questions. I also did want to shout out Darlene. I don't know if Darlene's on, but she contacted me after a Periscope session because she lives on the North Carolina coast, which isn't too far from where I am. And she wants information about my Wells Fargo lender, Rhonda. So thank you, Darlene, for emailing me. I appreciate it. If you guys aren't in the area, but you're kind of close to me, or if you just have questions, I'm good. If you just have questions, you can still email me, you guys. You don't have to be in Virginia for me to assist you. Obviously, you know, the markets are different in different places. Oh, that's a good question. So let me just finish that statement really quick. The markets are different in different places. I don't know if you guys realize that, but like say for instance, I like to watch HGTV, and a lot of the places where they're they're doing real estate and stuff like that, their market is very, very different from my market here in Virginia. So you guys just keep that in mind when you're looking at and you're watching and you're reading different articles and different shows from different places. So interest rates, I did talk a little bit about this, and I wrote something on my blog about it last Thursday or Friday, I think it was. The Federal Reserve met and they did announce that they will be increasing interest rates, which actually affects everything. It affects mortgage rates, it affects car loan rates, it affects credit card rates. So the Federal Reserve, and this is a little too complicated, but they set I think it's a prime rate, I think is what they call it, and then based on the rate that they set, the other rates act accordingly. That's the short answer. I think I'll put some more detail on it about it on my blog because it's a little too detailed for the Periscope, but it is going to increase the interest rates. Okay, and we're at 7th floor. Two really good questions. So let me just finish this first one really quick, you guys. And so the mortgage rates are going to go up. Now, the reason the rates are going up is because the economy over the last couple of years has been getting better and better, which is a great thing. But that means that it's going to become a little more expensive to buy a home. So that's why I stress, if you're interested in buying in 2016, especially the earlier part of 2016, go ahead and get your pre-approval as soon as you feel like when is it effective? The rate changes every day. So the rates have been going up and down very slightly over the last couple months or so, but I'm not sure. I mean, you don't ever get a notice like the rate is going up tomorrow. It just happens. So thank you. So you've just got to you've got to watch the market. The rates come out every morning. And then whoever you're working with, they're going to help you as far as letting you know what the rates are that day. And you can also Google them. You can Google them, you guys. The thing about it is, if you're using an FHA, I'm going to take this out a little. If you're using an FHA loan or a VA loan, those rates are going to stay pretty low compared to a conventional rate, because a conventional rate is going to be really based on how good your credit is. So I know somebody asked a credit question. It's going to be really based on how good your credit is. With the FHA, as long as you meet that minimum credit requirement, your interest rate is the same. So with the FHA, the minimum credit requirement is a 580. No, I would say no. So the minimum credit requirement for FHA loan, the Federal Housing Administration has a loan which a lot of first-time home buyers use. The minimum credit requirement is a 580, but most banks require you to have a 600 or a 620 for that type of mortgage. So that's what you need to be, 580. But let me tell you, and I also have this information on my blog, so you guys go to the blog and pizza. Go to the blog and take a look at, I think I have the previous Periscope video up on the blog, as well as some information about FHA loans, because you can get a mortgage with a 580. Good. That's going to be another situation. So let me talk about that in a second. You can get a mortgage with a 580, but with a score that low, you're going to have down payment money. Like you've got to compensate. So, hi from Denmark. So you can't expect to have a really low credit score, no money down, have really high debt. You've got to have some different things to balance out your negatives, so to speak. So if you've got a 580, you can get pre-approved, but I suggest that people with a 580 have some down payment money. So the basic down payment is 3.5% on an FHA mortgage. Okay, 3.5%. If your score is lower, they're going to want to see you maybe have 5%, or they want to see that you have a little more income. They're going to see that you have a little bit more income to accommodate that. Yeah, and I'm going to tell you, Naturally Mojo, I bank with a couple credit unions, and to be honest with you, a credit union is not the place that I would get my mortgage. And I bank with Navy Federal. I bank with a bank called Bayport here. Not the place that I would get my mortgage, because that's not their specialty. And I know somebody else asked this question about credit unions. Credit unions are really great at car loans. They're really great at your checking and saving. They're really great sometimes at CDs. But as far as your mortgage, hello, that's not their specialty. And so most credit unions don't have a mortgage lender. Okay, it's kind of like going to a steakhouse and ordering seafood. You know what I'm saying? Like, you go to a steakhouse, the steak is their specialty. You should order a steak if you like steaks. If you really want seafood, you need to go to a seafood restaurant that specializes in seafood and has good fresh seafood. You understand what I'm saying? So I don't recommend credit unions for mortgages. I just don't. I mean, it's not, they're good at, yeah, I mean, they're good at banking, but they're not good at mortgages. I suggest Wells Fargo is number one for mortgages. Some of their processes really irk my nerves, but they're number one for mortgages. They only require $600 for FHA, which is lower than most other banks. And but if you want to use the grant program that they have, and I'll post that information on my site, you have to have a $640. Wells Fargo, Atlantic Bay is another favorite of mine. Atlantic Bay is another favorite of mine. And the max loan always depends on what your income is. What your income is, and sorry guys, my hand is shaking. What your income is and what your debts are. So that's the other reason. Yes, that's the other reason why I suggest that if you're thinking about purchasing a house soon, you need to go ahead and get your pre-approval because it's going to tell you exactly what you're going to qualify for, because not only are they looking at your debts, hi from Russia, not only are they looking at your debts versus your income, but then they also calculate your escrow amount. Like, your escrow includes your homeowner's insurance, your real estate taxes, and then if you're in an area like me, we have a lot of homes that require flood insurance. So all of that stuff is factored in to tell you exactly how much you can qualify for, including all of that. Hi from Turkey. So you guys, did I answer the questions? If not, please post back and let me know if I didn't answer a question. Thank you for the hearts, you guys. You can double tap on the screen to give hearts. And then also, if you, awesome, I'm glad I did. Please share this with your friends and your followers. I'm glad I answered the questions. And of course, so somebody asked about the site. The site, if you go to my bio here on Periscope, you can get to the site from there. I think it takes you to the general site, but the blog is, I only have like 3 or 4 pages on there, so it won't be hard to get to the blog. But I do have a couple of the reported Periscopes on there. One, I think, is talking about the interest rates. Self-employed, yes, thank you. So I do have a couple of the recorded Periscopes on there, so you can take a look at them. So self-employed, it is really hard. Because obviously I'm self-employed. I work on commission. One of the things that I suggest for self-employed people to make it easier, don't take everything off on your taxes. So basically, you know, self-employed, you can deduct a lot of stuff. A lot. And where people start to get in trouble is they'll make decent money, but then they'll deduct everything on their taxes, which is good because you don't have to pay any taxes. But you got to remember, okay, but you got to remember that if you make, say for example, you make $100,000, but you try to deduct like $25,000 or $30,000 in business expenses. So basically, if you make $100,000 and you deduct $25,000 in business expenses, you only made $75,000. You know what I'm saying? So that's just going to make it even harder to qualify. You don't want to be taking every single thing off, especially when you know it's a year coming up where you want to make a big purchase like a home. I don't know exactly what type of business you're in, but I hope that you keep good records. That's the other thing. Make sure you're keeping really good records. Use QuickBooks or some source to show where the money comes from, because they are, I mean, it's just part of our profession. They're going to pick apart your income and your statements to make sure that you make what you say you make. So bank statements, income, I wish I knew what that said, or maybe not. I'm sorry, I don't. Income, bank statements, QuickBooks, invoices, stuff like that. Keep good records. That's the only way I know how to combat the whole self-employed situation, because it's definitely a situation. Definitely is. I've not tried to purchase since I've been self-employed. keeping your head above water due to the money you make. So do you agree? Are you on Twitter? Because I think we should talk after the Periscope. Or you can always contact me through email. But let's talk, because you're in Houston, and I think there's some other information I can help you with, and I can also talk with my lenders and see what pointers they have from the lender perspective about being self-employed and getting qualified. So this short scope has turned into a long scope, but I really like it. I really, really like it. Okay, can you post your email address here if you're okay with that? And then if so, I'll follow up with you, or we can do a private scope. You guys, there is private scope. It's like a private message scope, and I've done that with people. Business only though, because sometimes people do weird stuff. Or say weird stuff or whatever. Yes, please, you guys, if you're not on Twitter, so Periscope is connected to Twitter. I know I don't even, just ignore. Yeah, so Periscope is connected to Twitter. So if you do have a Twitter handle, I usually can follow up people through Twitter. But if you don't, then you've got to post your email address here. Awesome. You got to post your email address here, because I can go back through the comments and I can find your email address and contact you that way. Okay, guys? So I'm going to run. I'll probably do a shorter scope later today. Yes, they can. Naturally, are you on Twitter as well? Just let me know. And I actually just called her because like I said, Darlene may be on here, but you know, everybody has different names on Periscope than their actual real name. But Darlene contacted me about Wells Fargo, and I'm really excited about that. I've already called her to let her know that Darlene's going to be contacting her. So please, you guys, if you need the information, it's available. It's definitely available. It's definitely available. Perfect. I always suggest you need to try to get started ideally 60 to 90 days before you really need to move. 60 to 90 days. I think I'm going to go back to, I'll definitely contact you when I get back in the office, okay? I think I'm also going to post the recorded scope about short sales, because I've been getting a lot of questions about short sales, and I want to make sure people understand what they are, how they work. I'm not going to go back into it, but I'll post it on the blog. You guys look for it maybe later today, okay? All right, so my nose is running, and I'm going to go in, but I will follow up with everybody in a few minutes, actually, because if not, I'm going to forget. So you'll see my information in a few minutes in your inbox or on Twitter. All right, guys? Thank you. You have a good day, too.